The rebellion by mercenary group Wagner has exposed serious political divisions in Russia. But what could it mean for the country's economic stability? Well, joining me today is Anastasia Fedek. She's an assistant professor of finance at the University of California in Berkeley. Anastasia, welcome. Let's go ahead and begin with a big question on everyone's mind. Is our understanding of the fundamental stability of the Russian economy, is it changing because of what we've seen?
Yeah, so the short answer is this is definitely not good news for the Russian economy. We saw a lot of panic on Friday and Saturday. This panic was evident in the kind of demand for flights out of Russia. It was evident in, I think, a quadrupling in attempts to trade Russian ruble for dollar-backed stablecoin in the cryptocurrency markets. So a lot of demand, kind of panic all around. And of course, that has subsided when sort of the worst fears of the Russian elites did not materialize. It was not a full-blown coup, kind of got settled down as quickly as it came about. But the uncertainty remains, right? If this happened over a 2-day period, what else might happen next month is now a question that people are kind of actively considering. And of course, political uncertainty, political instability is never good for economic stability either.
All right, let's go further into the details, and let's take a moment first to look at the context for this discussion. What's being called the 24-hour mutiny. This past weekend, Yevgeny Prigozhin, the owner of the Wagner mercenary group, turned his men on the Russian military in the country's south and then began moving his forces toward Moscow before stopping some 200 kilometers outside of the city. Now, Prigozhin said his target was the country's military leadership and not President Vladimir Putin. But the move appeared to catch Putin and the country's leadership by surprise, and as we mentioned, pointed to deep political rifts in the fallout of the war in Ukraine. Now, the Russian currency, as Anastasia has already mentioned, the ruble took a tumble against the dollar, while we did see gas and commodity prices rising. Now, Wagner had actually been a potent weapon for Russia when it comes to its conflicts around the world, and one that was only tacitly acknowledged by Moscow up to that point. That is until after the revolt this past weekend. Let's listen to Vladimir Putin about the group.
Meanwhile, I want to note, I want you all to also know about this. Support for the entire Wagner Group was fully provided by the state, from the defense ministry, from the state budget. We fully funded this group. From May 2022 to May 2023 alone, the state paid Wagner the equivalent of more than 900 million euros for maintenance and incentive payments.
All right, back to my guest, Anastasia Fedek. This explicit description of the relationship between the Russian state and this mercenary group, one of many mercenary groups, I believe, are private military forces in Russia, actually, sort of surprising to some. What exactly was happening here?
Yeah, so this is not so much a revelation as a confirmation, right? I think Wagner has been ascribed to the Russian state for years. Since the full-scale invasion in Ukraine, this has only become more obvious. We've seen Wagner forces featuring very prominent, especially in kind of more heavy frontal attacks. Wagner boss Prigozhin complaining about not getting enough ammunition from the Russian Ministry of Defense, clearly indicating that he was kind of on their support the entire time. Lots of discussion about labeling Wagner as a kind of terrorist group in the US and Europe. So they've always been kind of tightly linked to the Russian state. What's new here is acknowledging this so explicitly. I think that this shows that Putin's balancing kind of what he says externally with what he's saying domestically to kind of maintain that image of having things under control. And clearly that domestic need has now surpassed the need to continue lying outside.
Anastasia, sort of shifting gears a little bit from Wagner, how would you describe our understanding of the Russian economy leading up to this event? It's a big question, of course, because there's been so much that's happened in the past year, of course, due to those war sanctions.
Yeah, absolutely. And I would say that kind of exactly leading up to this mutiny in the last few months, that's when we've been seeing a lot of the effects of the sanctions. The Russian government is now running a budget deficit. It's typically running a budget surplus, so this is quite uncommon. Of course, the budget consists of two parts, revenues and spending. And we've seen a lot changed in Russia on both sides. The revenues have declined. So looking at the first quarter of 2023 compared to the first quarter of 2022, those government revenues have declined by about 50% due to the energy sanctions. So, of course, at the beginning of the war, Russian revenues actually increased because of the energy prices rising up due to that kind of uncertainty. But over the course of the year, as EU with G7 have worked on their respective sanctions, so the partial embargo in the EU, the G7 price cap. What that's done is that's stabilized the energy prices while reducing Russia's revenues specifically by making it transport its energy less efficiently. Now, instead of the easy pipelines to Europe, we're seeing Russian oil going as far as Brazil, selling at lower prices to partners like China and India. So the revenues have declined a lot. The spending has also risen up. Russian defense spending is up almost 300%, of course, because of the war. So we were seeing a lot of shifts in the Russian economy, especially in that last kind of quarter, the first quarter of 2023, already leading up to this mutiny.
So is it fair to say that after a while in which the Russian economy appeared to sort of maintain a kind of stability in the immediate aftermath of these sanctions and this kind of isolation that it saw from the EU and the West, that now we are seeing actually this kind of decline in many ways when we look at trade surplus or trade balance, when we look at the value of the ruble, for example, falling this year?
Yeah, and I wouldn't kind of say that it's final. I think it's cumulative over this entire year and a half almost. The effect has been cumulative, and the reason is that that's how meaning the West, designed the sanctions, right? We did not necessarily go for the most kind of immediate, short-term, large effect on Russia. That would have been an immediate embargo, say, in the EU back in March 2022. Instead, the kind of Europe, US, and other partners have been kind of managing a dual objective of hurting the Russian economy while kind of cushioning and not harming the economies, say, in Europe. And given this objective, the effect has been slower and more cumulative, right? We've kind of kept the prices down while reducing Russian revenues versus an immediate embargo would have, of course, sent the prices higher up. So it's sort of I guess, from the design of the sanctions, they're such that they're meant to be long-term effects on Russia. And that's why we're seeing them cumulatively over the long term and then kind of I guess, finally quite visible in this first quarter of 2023.
If you're an investor in the Russian market, you've stayed in the Russian market despite everything going on, what does this mean, what we saw over the weekend? I mean, things have already, as you've said, they've been sort of declining in many aspects, economically speaking, and then suddenly this sudden shift that seemed to sort of pull out the carpet from under everything. Does that make you even more concerned that there could be sudden capital flight, things like that? I mean, how do you look at this if you're still in that market?
Yeah, I think that's a big if right there. If you're an investor still in the Russian market, your risk tolerance is very, very high. I mean, we've seen Russia, right, appropriating the assets of private companies that are still in Russia. So it's clearly a risky endeavor to remain in that market. And I think kind of that risk, if it wasn't obvious to some investors, has become more obvious after those 2 days. That not only is there no guarantee that the current government will not do something absolutely outlandish, but we don't even have a guarantee about kind of just how stable that current government is and kind of what internal divisions behind the scenes there may be going on.
We mentioned the reaction of Russia's currency, the ruble, to last weekend's events. The ruble, in fact, let's take a closer look at it. The ruble, in fact, dropping on the first day of trading after that incident, touching a new record low against the U.S. dollar, a low since March 2022, before it did, in fact, pare back many of those losses. Let's take a quick look at how the ruble has been performing against the dollar since February 2022 when the war began. After a steep drop following the invasion in Ukraine, the currency actually benefiting from some emergency measures undertaken by the government. And actually by June 2022, it had recovered much of its value against the dollar. Since then, as we've spoken about, it's been on much of a downward path with war losses and that oil embargo by Western states really weighing on the currency. From January to mid-June this year, the currency lost 20% against the dollar. Let's go back to Anastasia Fedek with the University of California in Berkeley. How useful is the ruble as a gauge of this economy?
Yeah, so of course, any reactions are muted by those capital controls that you mentioned. So what the Russian government did is basically limited the ability of anybody to trade rubles for foreign currencies such as US dollars. So it's not that easy to sell out of the ruble. And that's why I mentioned at the beginning also what we saw with kind of the Russian elites, I guess, those who would afford to. We saw a lot of trade, for example, in dollar-backed stablecoin rather than US dollar directly. So it's an indicator. It's not a perfect indicator because the Russian government has been kind of propping it up the entire time. And when we've also seen them at times when the ruble has strengthened, relaxing those capital controls a little bit, and then earlier this year, 2023, kind of strengthening them back. So they're definitely modulating their kind of controls in how able people are to even sell out of the ruble in response to any movement in the currency. So, of course, kind of immediate moves we still see, but on the longer term, we have to kind of keep in mind that there is quite a bit of a muting of that reaction due to people not being able to sell out as much as they might want to.
Does that mean, in other words, that when we do see a reaction, we should consider that it's actually quite more significant than it would look at first glance?
Yeah. So if we're seeing a reaction, that means people are trying to sell out, and we have to keep in mind that many of them are not going to be able to as much as they want to.
Tell us again about the stablecoin trading. You mentioned that. What did you see this weekend in terms of a reaction? I mean, how would you describe that compared to what we saw with the ruble as well?
Yeah, again, I would say like these are all kind of indicators, right? And this is a particular slice of the Russian society that is able to do it. But what we were seeing was, like the prices of flights out of Russia, for example, kind of jumping up a lot again. And we did see stablecoin trading increase. I think it's about a four kind of fold spike just on that 24-hour period during the kind of the short mutiny. And I think those are all indicators that kind of the people inside Russia who are able to kind of trade out of Russia, so to speak, were doing it very, very actively in that 24-hour period.
And we also saw the commodity prices briefly rose following the weekend's news, including for wheat and for natural gas, both of which we know Russia produces in abundance. I would assume this is another critical reminder of just how important these exports are for the whole world. That would have ripple effects, obviously, down the line, not just for Russia as a domestic producer.
Yeah, absolutely. So any commodity that Russia is producing, if we're having uncertainty, that means uncertainty for how much of it will be coming on the global market. So we did see spikes in kind of both sort of energy prices and kind of food commodities, as you mentioned. In some respects, maybe those, again, weren't super dramatic, right? So it's similar to what we discussed with the ruble. And I think part of that is reflecting the fact that we're already factoring in a lot of uncertainty about Russia, kind of globally when we're thinking about commodities. We're already kind of seen a reduction in Russia's energy trade, right? So I mentioned those reductions in Russian revenues, mostly coming from energy with the price cap. A lot of that is coming from the prices coming back down. A lot of it is coming from discounts on Russian energy, but some of it is also coming from Russia actually selling less than it was a year ago. So kind of Russia's role in the commodity market has also been declining over the last year, which has probably led to a more mild response in commodity prices than it would have been had we not already seen this kind of gradual weakening of Russia's role in the commodity market.
We want to take a closer look now at Russia's biggest trading partner at this moment, a single trading partner, I should say, and that is China. Two countries have increased trade since the beginning of the war, with China benefiting from Russian natural resources like gas, and Russia in need of material for its war. We have a soundbite from China analyst Moritz Rudolph from Yale Law School. Let's listen to that.
So, this is something that for the Chinese side, this is of great concern because they have huge interests in upholding stable and predictable relations with Russia. They have economic interests, they have political interests, and they want to cooperate with Russia at the, for instance, in regional forums and at the multilateral level.
All right, back to Anastasia Fedek from the University of California in Berkeley. Putin's power looking a bit more hollow after what happened this weekend. What does that mean for China, a country on which it's becoming more and more dependent?
Yeah, I mean, China is going to be watching this very, very closely. Of course, the relationship between China and Russia has gotten tighter, a lot of it on the Russian side, right? So Russia is indeed much more dependent on China for its trade than it was a year and a half ago. It's somewhat asymmetric. So China, to a large extent, is extracting rands from this now closer relationship by being able to access those commodities at cheaper prices. But there is still some symmetry to any trade relationship. So, of course, by purchasing more from Russia, China does now also have a greater dependence on kind of that trade continuing to go smoothly. So I would say that would be concerning for China. Right, if they're reorienting their imports toward Russia, how do they think about that in the longer term? How stable that is in the longer term? And so I think China is worried, and it's worried kind of both in traditional sort of trade relationship, but also in terms of their broader relationship with Russia, not just economic trade, but also to what extent have they been supporting Russia behind the scenes, right, with things like drones from Chinese companies still being provided to Russia, right, dual-use items for the military, right, some potential kind of sanctions evasions through those third-party countries like China and Kazakhstan. I think that will also be something that is a concern. Right, so kind of balancing that relationship that China has been doing between not aggravating Europe, the US, and others who are sanctioning Russia, and yet kind of tacitly supporting Russia. I think that balance will be a bit shifted because it's one thing to kind of balance a relationship with a rogue regime that others are sanctioning. It's a whole other level to be doing that with a rogue regime that may not even be a strong rogue regime and may well kind of and end up unstable in the near future. So I think for China, all of those considerations are going to be very important and definitely not seen as good news.
Anastasia, I want to take a quick look, or a step back, I should say, sort of look at the big picture. Can we say that markets are properly sizing up this instability that we're seeing in Russia? That is, this economic instability. Is there any kind of shift that we've seen over this past weekend? As you already mentioned, we've already seen so much. This is a weathered economy in many cases, sort of war affected, obviously, by sanctions, by fewer purchases of its natural resources. Did this mark any sort of additional shift in the grounds, the fundamental stability of that economy?
Yeah, honestly, I think it's part of that cumulative action that we talked about earlier. I don't think that I would call this a fundamental shift. I think it's kind of it's a symptom, not a cause. The reason we saw what we saw on Friday and Saturday last week is obviously because of what Russia's been doing for 15 months, 16 and a half months now. So I think it's kind of maybe revealed some of the issues to those who were not kind of following as closely. But in a lot of ways, this is kind of just a sign of everything else that's been going on. So it's a cumulative effect. Of course, if something were to happen that was much more dramatic, like a coup, that would be kind of a structural shift. But with something like this, kind of just an indicator of the extent of the uncertainty, I think it's kind of people are updating their expectations on the uncertainty itself, but it's still part of that kind of gradual decline, I guess, in the kind of economy in Russia and the relationship with the outside.
Had this indeed turned into a coup, I imagine that would be a massive shift, actually, because this is a nuclear-armed country, and I would imagine that would probably ripple through markets in a way that goes beyond, obviously, commodity prices and things like that. Is that fair to say?
Yeah, absolutely. I think the amount of uncertainty that we would have with an actual coup would be pretty dramatic, and of course, right, that would depend on how it plays out in those first couple of days.
All right, and we're just at the beginning of a lot of what's going on, obviously, with the story in Russia and with the consequences of what we saw this past weekend. And with that, we want to say thank you to our guest for today's discussion, Anastasia Fedek. She's an assistant professor at the Haas School of Business at the University of California in Berkeley. Thank you, Anastasia. And thanks to all of you for watching this discussion. Be sure to tell us what you think in the comments. We hope to see you next time.